All right, good morning, trade pros. Welcome to the morning market update for Friday, October 12th, 2018. It's George Papsov, Trade Pro Academy. We got a special visitor in the office today. I'm going to introduce you guys. This is our friend Justin here. It's actually my brother-in-law. This is the wife's brother. So he's got good blood, you know. He's a good kid. All right, so today we're going to talk about a few things. We had some earnings season. Sorry, bud. You good? We had some earnings coming out of some banking stocks. Yesterday's day was very volatile, and we traded in the room, and we had oil inventory as well. It presented a lot of opportunity. Myself personally, I didn't do very well on oil inventory. I actually finished down on oil as a whole, and I worked to the closing bell. So I'm very open and honest with you guys. I'm transparent. Typically, I trade 2 hours in a day. I make my profit target, and I do other stuff for the remainder of the day. But yesterday, I worked right to the bell. It was up till 4 p.m. I caught some of the short side on equities. And like we talked about yesterday's morning session, we said early on when we're going to get a little rally, but sell rallies. It was a down day, an opportunity to continue to sell. If you just followed that simple advice, you would have had a great day. Yesterday, I struggled a little bit with oil, but I was able to capitalize on S&P 500. My last trade was at 342. Was when I closed my short. So I was really down to the wire on that. There's a lot of volatility in these markets the last couple of days, and I suggest that you stay a little bit later in the office. You're going to be treated and rewarded for it. Now, I'm going to tell you guys one thing. Trading volatility is not easy. After the day yesterday, I had a great win, a pretty big up day. I went home tired as heck. It's like mentally exhausting. So make sure you stay fresh as a newer trader. Don't trade past your ability, both mentally, physically, and capital. Stay within your lane, and you're going to have the best results. That's what worked for me. And get a good night's sleep. Yesterday, I got a great sleep. I was exhausted. I went to the gym. Supposed to be on the treadmill for 40 minutes. 18 minutes, tapped out, went home. All right, so today's morning market update. Let's take a quick tour around the world. Japan's up 0.6%. Hong Kong's up 2.1%. China's up 1%. India's up 2.2%. Strong gains across the board. We've had a very bearish last week and a bit. We've sold off a significant amount, and I think today we're going to recover some of those losses. Today, I got to tell you, I'm going to look for the upside early on oil and equities. It is a downtrend, so we're going to start counter trend, and if that doesn't work, if it's still momentum to the downside, we're just going to switch our strategy and start selling rallies and go to the short side. You can come with an idea in the morning, but don't let that idea ruin you. You got to look at what the market's telling you. You got to switch from your bias to whatever the market bias is. I'm going to start on the long side, looking to buy dips. I think we're going to get a little bit of relief rally today across the board in all markets. So far, it's already happening. Look, Asia's up big. In Europe, London's up 0.6%. Paris is up 0.4. Frankfurt's up 0.4%. So gains across the board in Europe as well. In the United States, Dow's up 0.6. S&P 500's up 0.8%. Nasdaq's up 1.3%. Whenever markets move, technology stocks move the most. So on a down market, you're expecting FANG, Facebook, Apple, Netflix, and Google to move more than any other stock, and they did. FANG's gotten obliterated the last couple of days. So today it makes sense that they're up the most. They're recovering the most because they got hit the most. All right, crude oil's up 0.5%. Gold's pretty much flat. Pretty big rally in gold yesterday. We hit 1230. Now trading 1224.50. Bitcoin's up 1% to $6,236. Victorio and I were talking about something interesting yesterday. Bitcoin has an opportunity in the first major market crash to cement itself as a safe haven asset, meaning that if people are afraid of stocks, they take the money out of stocks. Where are they going to put it? They put it typically in gold and the US dollar, but Bitcoin has an opportunity to become a safe haven asset. Yesterday, it didn't look that way. We had a really bearish day and it was getting hit as well. So interesting stuff going on in the crypto sector. This morning, we had import-export prices that came out at 0.5% versus 0.2%. And month to month, actually, sorry, year over year, it's 3.5 to 3.1 for the import price index. So it's not a shock that import prices have increased when there's tariffs on everything that's being imported. All right, so that's very basic, simple. There doesn't need to be explained any more than that. Today's the kickoff of the third quarter earnings season, and we had three big banks report: Wells Fargo, Citigroup, and JP Morgan. I'll take you through each in a moment. And let you know why I think this will put some upside momentum in the market, these earnings early on. First and foremost, you guys might recall Donald Trump wanted to change the reporting cycle from quarterly for companies to semi-annual. So you know how we have quarterly news reports? Companies say, hey, this is our earnings on a quarterly basis. Donald Trump wants to make that to be twice a year instead of 4 times a year. For me, I welcome that change because earnings to me are more gambling. I don't know what a company's earnings are. I don't work on the executive board there, and it's hard for me to gauge it. So actually during earnings season, I trade less because I don't know what's going to come out, and it's gambling to buy a company before earnings just because you think you know what's going to happen. The truth is, anything you think you know what's going to happen as a trader, you don't. All right. The only thing that you do know is you know nothing, and you're looking at price action and you're learning as you go. However, the SEC chair has said that they're not planning to do semi-annual yet. Donald Trump's words are just words for now, and so companies will report quarterly. So with that said, the quarterly reporting kicked off. Wells Fargo came in at $1.13 earnings per share versus $1.17. They missed on the earnings per share number, but their revenue was in line with expectations. So they made $21.9 billion in the last quarter. Justin, what would you do with $21.9 billion? Imagine making that in 3 months. Yeah, it's crazy. The return on assets, 1.27 versus 0.93, and return on equity, 12%. So despite the fact that they miss on their earnings per share number, their revenue and ROA and ROE came out actually positive. So it's not a terrible report. It's just not a great one. All right. Let's see what I want to mention to you. Total average loans are down in the bank, so their leverage ratios decreased a little bit. And overall, it's a neutral report for Wells Fargo. Citigroup did a lot better. All right. Citigroup here is a clear win. They beat 173 per share versus 167 and in line with revenue expectations. So basically, they beat the top line number on revenue as expected. In terms of return on equity, 9.6% versus 7.3 year over year. That's a strong beat. So you're looking at a higher amount of revenue quarterly, and that's good. All right, regional revenues, North America is down for Citigroup. They made the majority of their returns in Europe, Middle East, and Africa, 8% year over year. And that's interesting. Latin America, the largest gain, 10% year over year. So you're seeing Citigroup capitalize on other markets outside of North America. And that's key. Okay, that's a good thing. Citigroup beat. That's a positive. So far we have Wells Fargo flat, Citigroup beats. JP Morgan reported as well before the bell. We had 3 big banks before the opening bell, and that's huge. Q3 report came out at 2.34 versus 2.24. That's a big beat. All right, 27.8 billion revenue versus 27.2 expected. So JP Morgan is a positive as well. Return on equity is around 14%. Assets under management, 2.1 trillion, up 7%. And really, you got to dig really deep into the statements to see something you don't like about JP Morgan's earnings quarterly. So JP Morgan beats, Citi beats, Wells Fargo is flat. Here's what I think. The market sold off a fair amount, and any news is good news that the market could take. So it's going to look for the first positive thing and kind of anchor to that. So today, I think we're going to run some buy stops. If you're short, yesterday was a good time to cover some of that short and get paid. Today, we could rebound. It's a Friday. We want to get into the weekend on positive sentiment. A few things are happening here in the market. So I'm going to take, do I got time? Yeah, I got time. I take 2 minutes to explain it to you. Okay. Why did markets sell off so much yesterday? It's called forced liquidation. And I'm going to give you a quick example. What's the financial industry been convincing people to do? To borrow money and put it in the market. So they say, look, at a 3%, 4% loan or interest rate, if you put 500,000 in the market and you make 10%, that's a huge return for you. All right, it's 50,000 minus the loan amount, it's around 35K. You make based on nothing because you're just borrowing. However, here's a problem. You get a correction in the market, and now that loan is under. You got to pay it to service it. Your margin requirement goes up. If you don't have margin to put into your account to deposit, they're going to sell some of your stock. All right. They sell your stock. Everybody gets margin called. The price of the market drops. You need to sell more in order to meet that margin. So what you saw yesterday was forced liquidation and margin calls across the board on retail and institutional investors. And that's why the sell-off was so steep and so quick. Remember this, if there's one thing you learned from me, the stock market takes the stairs up and the elevator down. When it's time to drop, this thing doesn't play around. It drops a lot. The last couple of days had the look, feel, an atmosphere of 2009. And a lot of you that are trading today may not have been there during that period of time, but I could tell you I lived through that. I traded through that. And what you see is continuous downside. You'll say, there's no way this thing could go lower. I'm going to buy more. And it goes lower. And then you say, there's no way it could go any lower. I'm going to buy more and hold out through this. And it goes lower. And eventually you lose every single dollar you have. And then it reverses and goes back up. Then you were right. The question is, you were right eventually, but you lost all your money. So are you better off? The answer is no. So be very careful for these forced liquidation days. There's a lot of sell side. Now, I'm going to give you the positive side of the picture. Fund managers are basically evaluated by their November end. All right. So in November, that's the performance. They get a lot of pay based on that and returns. So fund managers, if you think about the last couple months, it's been very bullish, right? Stock market has just been vertical. Everyone's been buying. They're like, oh, this is easy. Investing's easy. You just buy anything, it goes up. It's easy until it's not. So what these fund managers have had to do is, with these stocks, they're seeing the market drop and they're saying, look, I got to have a good return for my investors. So they go to sell the stocks. Like, I want to lock these gains in. If the market goes down, let's say the market keeps dropping and I sell my position here, I've taken profit. Now the market drops, and the more the market drops, the better I look as a fund manager for getting out early. So what does that mean? All fund managers are now selling. So margin calls, fund managers, everyone's just piling on the bid. Nobody wants to buy it. Lower prices happen as a result. Yes, there's one hell of a volatility day. Hope you guys capitalize on it. Today, I think we see a little bit more of a bid hold, and I wouldn't be surprised to see downside in the morning, but in the mid to late afternoon, look for a high close rally. I think they're going to mark this thing higher. Think about being a fund. You just liquidated a lot of money. You got cash. You want to go in the weekend on a higher note. What do? You buy it. Just go in and just start buying it. Watch for bids. If there's strong bids in the market today, we're going to rip. All right, that's what I got for you guys. As always, manage your risk. Your job as a trader is not to make money. Your job as a trader is to manage your risk, lose less. That in turn will mean you're going to make more. So have those stops, manage your risk, trade like a trade pro. And I invite you guys to come out to our trading room. We trade live every day, 9 to 11 a.m. as a group. In fact, I'm going to turn around now and open up the trading room. So you guys have a great day. Have a great weekend. It's been a trying week. And if you've had a hard time, use this weekend as an opportunity to re-energize. So best of the weekend to you, your family, friends, loved ones. See you guys on Monday. Thanks for tuning in. Take care, guys. Goodbye. Anything else, Vicky? Justin? Do you want to talk about Wells Fargo a little bit more? All right. All right. Justin's good, guys. Yeah, big shout outs today, man. You made the trip. All right, trade pros. There's a few levels I'm looking at today. Thanks, Marky. Looking at a few levels for some high probability trade opportunities. I'm going to share them with you. We're going to set up some trades, and let's tackle this market on the open. So let me get in here, turn the screen share on, and walk you guys through it. All right, YouTube, take care.